Okay, let's unpack this. Today, we're doing a deep dive into something maybe a bit unexpected.
Yeah,
We're exploring financial wisdom, but from the Amish community.
right. That definitely makes you pause, doesn't it? I mean, how can a group that deliberately avoids things like, Wi-Fi, credit cards, the stock market?
Exactly. How could they possibly offer financial advice that's relevant for, well, for us today?
It seems counterintuitive.
But the source material we're looking at, it paints this really surprising picture. It talks about how, while lots of people might be caught up in chasing trends or stressing over debt,
Car payments, the latest phone, that kind of thing.
yeah, all that. Meanwhile, many Amish families are apparently quietly building what the source calls real lasting wealth.
Okay, like what kind of wealth?
We're talking serious assets, farms, land, successful businesses, often valued well over $1 million. And crucially, the source says they're paid off, debt-free.
Wow, paid off. That's
Yeah.
that's a huge contrast to the financial reality for so many people.
Isn't it just? And what's fascinating is how they supposedly achieve this, without all the modern financial tools. It's not about fancy investments.
It's more fundamental then.
Seems like it. So our mission here is really to dig into these simple but powerful principles the source highlights to understand how this works.
Makes sense. Where do we start? What's the first principle?
Well, the first big one, maybe the foundation for everything else, is living dramatically below their means.
And the source stresses this isn't just being a bit frugal, right? It's like a whole lifestyle choice.
Totally. It's built around intention, resourcefulness. Instead of just buying convenience, they focus on what they can build themselves or repair or grow or reuse.
Like growing their own food, fixing tools instead of replacing them, maybe even building their own homes or barns.
Exactly. It's this deliberate avoidance of spending that many of us might just see as, well, normal or unavoidable.
That level of resourcefulness, it must tie into the next point. I'm guessing it's about debt.
You got it. The source is really clear. They avoid debt, almost like the plague.
So no credit cards, no car loans, no financing plans.
Nope. The principle is simple. If you can't pay for it in full right now with cash you saved, you don't buy it.
Just wait until you've saved up. The discipline that requires, especially today.
It's pretty incredible to think about. And
Yeah.
when they do save up and spend, the source points out what they prioritize buying.
Okay, so what do they buy? Not consumer gadgets, presumably.
Right. They focus on appreciating assets, things like land, maybe livestock, quality tools that last, and importantly, businesses.
Ah, businesses. So they're entrepreneurial.
Very much so, according to the source. Successful furniture makers, builders, farmers, lots of different enterprises.
And what are those businesses like?
The source describes them as typically family-run, super lean, low overhead, often cash-based, and they cut out middlemen where possible.
So they're building tangible value, not just paper wealth. Productive assets, profitable businesses. Makes sense.
Yeah. And there's one more really powerful piece the source talks about, community.
Community. How does that fit into finance? Oh, like the barn raisings the source mentioned.
Exactly like that. This community support, it's not just, social niceness. It has real financial implications.
How so?
Well, it kind of replaces that drive for individual consumption, the keeping up with the Joneses fueled by status or social media. Mutual support acts like a form of shared financial security.
Reduces individual risk, maybe. Fosters what the source called shared wealth. The whole community structure provides resilience.
Precisely. Now, the source is careful here. It's not saying everyone should, ditch their phones and start farming tomorrow.
Right, it's not a literal blueprint.
No. The idea is to explore the powerful simplicity here, to maybe consider that idea the source puts forward, that sometimes less really is more, especially financially.
It definitely makes you think differently about where financial wisdom comes from, doesn't it?
It really does. As this deep dive shows, lasting wealth doesn't only grow on Wall Street. It can come from discipline, simple living, strong community.
Which brings us back to that core contrast in the source material. In a world that's constantly telling us wealth is about accumulation, about showing it off,
Yeah.
what does wealth truly mean to you, especially when you consider this community that seems to prioritize paid-off assets, resourcefulness, and helping each other over, well, buying more stuff and going into debt?
That's definitely something to chew on after this deep dive.